All right. Hello, guys. Glad to have you on board again today. Exercise stuff, same old shit, repetitive stuff, things you've already seen last week, but we're going to do it all over and over again. And that's, of course, what you guys have to do on your own as well when you're making after work classes or stuff like that. Okay, so basically, the way you do this thing is quite easy. If you want to have a broad vision of what my structures are, what my patterns are, and how to properly use the context rules I teach you, you need to apply them to a huge number of markets. That's basically what is explained into the first pages of the PDL manual. You need to see markets just like a scientist would do on an experimental feature. Which means if you're trying to set for an experimental feature, you need to set some ground rules, some parameters that won't be changed, okay? You need to set and frame the context to isolate some constants. So what we want in here is that I give you the constants. I give you the framework, I give you the rules, you just use them. So that comes up with that brings us to the next phase of the experiment, doing the same shit over and over again. Okay, so that the statistics can emerge out of multiple occasions, okay? Because the first things you're going to try with the strategy may work or don't work or whatever, but you're certainly not going to see the statistical importance of the rules I taught you unless you apply them into many markets, okay? So before trying to judge whether my rules are good or bad, and no spoiler alerts, I've been using them for years and I've been teaching trading to many people now to let you know that they are good rules, but you won't believe it until you see it. And in order to see it, you have to look at a numerous charts. So do it, okay? Replay trade, analyzing historical charts, do it that way. The best possible way to do it is to do it twice a week, 1 hour long sessions and no more, because otherwise you will lose attention, and to repeat the same old process week after week until you've seen enough charts so that the statistical behavior of my rules starts to emerge. And at that point, you will see my range patterns and contextualizing stuff not so shadow and blurry that it was before. You will start figuring out what it actually means. And this is what you guys want. You're here to figure out if what I teach you is true or false. So I just told you how you can do it. If you want to see if my shit is true or false, you have to play around with it multiple times to see this through. Okay, so let's do it over and over again. What you guys should do on your own and what we're going to do all together today is to try looking at any GitDim chart. The way you do it is that you randomly input 2 letters on your keyboard, like for example DV, whatever. I recommend you guys to look at stocks first, okay? Don't analyze stuff you care about. Don't analyze stuff that is in your portfolio. Analyze some random third-party shit that you don't pay attention to. So that you look at the technicals, you look like an experimenter rather than a trader who thinks he knows the future. And that's going to be better. Okay, so we're going to analyze this one today, which is KN, because goddamn gorgeous range. And you will do these things. The setup you want to put yourself into in order to have a clear sight of the context is to look at approximately 25 context boxes. Okay, so that means 5 sets of 5 context boxes. And as you can see, that would mean anytime I see anything above July will be more than enough. So this is what you guys should look at. Okay. And you've got all the information you need in here. Remember that when you are learning ranges, the first thing you need to answer is a simple question. What is the damn context? Okay. Before even trying to figure out third range boundaries and so on, okay, you need to figure out and answer that question. You've got multiple options into this question. Let me summarize all of them. This is really important for you to understand. The easy answer first is this a range? Or is this a trend? Okay, these are the first two options you want to pay attention to. Let me just... Okay, though, is this a range or is this a trend? But there are other options, of course, otherwise that would be way too easy. Okay, so what are the other options? There are actually two of them. So the first question you should ask yourself is it more looking like a range or is it more looking like a trend? Okay, in here, we always look at the same thing, the moving average position related to the context. Okay, so in here, the moving average is inside the context, is flat, the context are rising, and prices are goddamn oscillating across. So anyhow and anyway, that certainly do not look like trends, but it looks like ranges. Okay? But what are the couple other options left? So try figuring out what is a trend that looks weird. That would be what we've just said before with the experience guys. That would be an excessive market. Okay, so these are the ones we don't nearly care about now because this is more a deal for trend traders. But in terms of ranging context, what is our worst enemy? What could be the fourth option in here of a context? Of course, just like excesses for trend traders, whatever is in here is something we don't trade. But what is it? Because it exists and we need, yes, chaos. So chaos is a context that we do not trade. Okay? But that we need to figure out. Okay? So in order to trade range, we need to understand that chaos is still a probability. How do we figure out range to chaos perspective? How do we mitigate the probability of being in a chaotic structure when we are in possibly a range? Okay, so let me just sum up in a different way. When we know that we're here, because we know that we're not in trending context, how do we mitigate the probability of being in a chaotic structure if we ever trade ranges? Nope. Oh, this is, no, actually, this is one way to put it. Anyone else? Just try it out. I mean, there's no bad answers. The only things I care about is if someone finds the answer on its own, that's great. If no one finds it, I'll give it to you, but I'd like you guys to try first. Cycles? No, cycles is more for trend traders. Normally, cycles is not something you pay attention. When you are range trading, okay, you don't even need this. Remember that the signals are the stuff you look at in the late stages. It's there for risk limitation purposes. Do you have sufficient risk limitation to take your trade? Yes, no. But we don't need that unless we are into risk management phase, which is certainly not now. First, we contextualize, then we figure out the maturity. Okay, remember these things? Context, maturity, speculative area. And as you are into the speculative area, we look for signals then, certainly not now. Anyone else? Don't fear. I'm not judging anyone. I'd rather like you to try it out so that if someone gets the right answer, it's going to be a huge benefit for this person. Yes, there is there. Okay, I wanted to a specific answer, but I'm probably too picky out there. What I wanted you guys to figure out is that what we account for into the range context to somehow mitigate potential chaotic structure is the risk management. That's why we use large Fibonacci retracements and all of these things. That means that even if we trade the range and end up being in chaos, we can absorb quite a lot of chaos before being stopped out. That's the only way we pay attention to this. We will trade ranges as long as it fits our pattern, and if it ever ends up being chaotic, well, sometimes we'll take a stop loss, some other times we'll just do well, and the risk limitation will normally put it into a safe place that mitigates the potential chaos. So the answer is, even if we go for chaos, we're not going to pay attention to this. It exists. We need to know that it exists, but we're not going to pay attention to this. If we ever fall down to chaotic structures, well, shit happens. So, anyhow and anyway, we're always going to take the range perspective. Okay, so we're always going to go for this one. If we cannot go for trends, okay, if this option in here is not possible, we're always going to open up our range boxes. And we mitigate the chaotic perspective by having large risk limitations. Okay? Is that clear to everyone? If it's not, let me know. Okay? So chaos exists, but we don't pay attention to this. So we always look at the markets in our range perspective. In the range perspective, we always look at two key factors. These are the contextualizing factors, the things we look for. What are the rules that you can't break? In order to trade a third range boundary, to trade ranges, what are the ranges you trade? Nope, that comes later. What is the context? Yes, needs to be preceded by a trend. Okay, so this is mandatory rule. If there is no trend preceding, you don't apply my ranging patterns. You will have something else, and we'll talk about it. What's the other thing? Okay, no range in the higher time frame. Okay, so looking at these two rules, okay, in the current market, do we see a trend proceeding? Not nearly. I mean, possibly the moving average in here might have gone below the context. But anyhow and anyway, do we pass on the higher time frame? No, we have reversed the higher time frame context. So in here, the only thing we can use is the range perspective. But the range contextualizing method tells us that anyhow and anyway, what we're looking at now is not the reference time frame. So we move to the higher time frame. Okay, the rules I give you are meant to put you in the right place. There's no room for error if you follow the guidelines. The rules will put you where you have to be. So in here, what else do we have? Are we preceded by a trend? Nope. Are we in a range on the high time frame? Nope. So, what else? What do we do now? Now that we have contextualized our market, can we trade it? Can we trade the third range boundaries and so on? Okay? Yeah, we cannot count the third range boundary, so whatever happens in here is not a third range boundary context that you can exploit. So anyhow and anyway, are you going to trade this motherfucker? Eventually, but certainly not with the third range boundary. So it's actually in the PDF manual, but what is the only thing that we can trade with this? Yes. Okay. So if there is not enough structure for you to trade the range with a third range boundary pattern, there's one last pattern you can use. And that's the remaining last options you guys have. There is no other way around, okay? You've used your contextualization rule and it led you to one and only conclusion, which is the one we wanted. It is a DOM range. So congratulations guys, by following the rules you found out the pattern you need to apply. Yes, there is no trend preceding, so you certainly cannot use the third range boundary. This is the larger time frame you could look at. Okay, going into the higher time frame will look like nothing. So this right now is, we don't know what this is, but this is not a pattern in which, this is not a market in which we can use third range boundary patterns. We know it's a range, but it's not a third range boundary like type of range because not preceded by a trend. Therefore, what do we pay attention to? The fibs, yes, we play the dumb range pattern. In here, we can count down how many boundaries we have. Okay, that would be 1, 2, 3, 4. Yes, that's a delayed third range boundary. In here, 4, 5, 6, 7. Okay, so these are our range boundaries. We are 8 range boundaries in to this motherfucker. So anyhow and anyway, this is a dumb range. Don't try to overthink things. You take your goddamn fibs from low point to high point, period. Now you trade this motherfucker anytime it dips below the context and inside this red area, inside or below. So where are the only trades you would have been able to take? Okay, out of all of our range boundaries, which are the ones we would have been able to trade? Eight? No, you wouldn't have been able to. Oh, and by the way, the Fibonacci's adjust over time. Remember that you need to put them at the current market top. So when we were looking for wave number 6, you probably would have traded it there. And you would have been fine, by the way. You would have sold in here at a 0.9. You would have used a stop loss of this size, which means you would be fine. You wouldn't have been stopped out and you would have been profit taken in here. So still a profitable trade thanks to the dumb zone area risk management. When the market is dumb, don't be dumber to put some tight risk limitation. The only smart thing you can do is to stop thinking, stop listening to the news flow, stop doing anything else but to just apply the dumb rule. Selling 8 is not above context. You need to be above the fucking context. And back then you had no signals, okay? Remember, so in here you probably wouldn't have traded, but this I would definitely have traded. Eyes closed. That depends on the signals, of course. I mean, yeah, this is where you had the signals. So this, oh, I would have traded that. Eyes closed. In this area, I would have traded. Above the context, at the trend channel, this is where I would have shorted. Okay? And you would definitely have bought in here. Bang, perfect shot on the number 7. Okay, so you would have shorted 6 and 7. All right. Okay, now that we are here, I would like you guys to stop looking at contexts. Okay. But look at trend channels instead. because that's what I would like you guys to do. Okay, look at these contexts, these trend channels. Well, anyway, by the way, no, we're gonna do it. Okay, let's jump into the lower time frame, because in this chart, there's one thing I would like you guys to see. Is this a trend? Is this enough for us to figure out that a trend has gone on in here? I would say yes, we've got lower lows and stuff like that. This is a weird behavior, but through your range traders goggles, the moving average has been going below the context long enough to figure out that there has been a third range boundary following this bear move. Where is it? It's a tough one. It's a damn tough one. But there's one, and if there's one to find, I would like you guys to find it. Where is it? And you'll see how gorgeously effective the rules that I've set it are. Because even if a shitty market like that is in front of you, you will find a place in which you'll make a good decision. But where is it? Okay, I'll put some numbers out there. Yes, that's a good idea. Give me a second. Okay, so would it be there, there, or there? And why? This is not going to be an easy task. No, there's no 1 or 2. I want one answer. Okay. I'll put it to a vote. I don't know if there's 1, 2, 3, 4, 5. Do we have numbers? Damn it. Normally there is a set of numbers, but I don't know where to find them. Too many emojis. Okay, here they are. So 1. Oh, damn it. No, that's not what I wanted. Add reactions. Whew, we'll make it. I'll get there. 1. 2. Where are you hidden? 2, 2, 2. Okay. Oh, I'm not gonna go right down to 7. Shit, it's gonna take too long. Man. Okay, we'll do it anyway. I'd like to have a vote. 3. If you can help me out by bringing the next ones. 4. 5. Wow, that's easy actually. Okay. 6. And 7. Okay. So pull up your votes. Okay, the reactions are not going to be visible for those in replay. Okay, so most of you guys are voting for 1 and 2. Okay. So I would accept both actually, because they look the same to me, but I would say 1 is the right one. So you always take the broadest level, okay? If you use the delayed pattern in here, which I think is true, Okay, all of the patterns in here are actually respected. So I would say there is a delayed third range boundary in here. We've gone from context. Oh, Jesus, that's not what I wanted. We've gone from context to context. Okay, we have retraced. We have broken. I mean, the breaking the trend line would be the missing link in here. But I would say we could drag some trend lines in here. It's not perfect. I mean, out of the delayed third range boundary rules, yeah, actually, I would eventually disagree with the breaking trend line one. But I mean, anyway, yeah, third range boundary would be delayed in here for me. Okay, which means the only thing you pay attention is what the hell is this market doing out of this level? And afterwards, you would see that the market tries to break the third range boundary, fails. This is the expert stuff we'll get to dig into later on. Okay, so out of these KN trade and KN asset, the only thing you would have done is back then, there was no other way for you to know that this thing would be so boring afterwards. So it was going down, which means look for third range boundaries to the upside and nothing else. You've got a goddamn third range boundary. So then wait for this market and look at what the hell it does out of this level. Anything else is for dumb traders to think about. And what you would see afterwards is that if you zoomed out onto this asset one more step, okay, you would see all of it out of a range. The only thing I would like you guys to do and to know out of this thing is to figure out that there has been a delayed third range boundary in here, okay? And that afterwards, nothing has been happening till then because we always fail to break below this level. And we've attempted 3 times and failed each and every one of them. So put your fibs, rest, and don't give a fuck about the rest. Okay? The only areas you pay attention to is buying the dips in here, selling the rips in here, and as long as the market doesn't break out of this range, it can make as many range boundaries as it wants. It's not your problem. So if you absolutely want to trade this, this is the only way to do it. And by finding out the only third range boundary into this market and then putting your dumb fibs is exactly what I wanted you to be able to figure out. Anything else, none of your concern. Just let it play. Let the dumbs play that. What is it? Okay, 1 second. We've got a suggestion. No, it's not. It's 1, 2, 3, 4, 5, 5, 6, 7, 8. Period. And this is just the craziest boring range you could have seen because yes, indeed, this market is doing crazy shit. Look at the wave boundaries length. There is no such a thing as consistency into this market. You've got a very short wave and then a very long and then an even longer one. But still, this is a dumb market context. If you try to make any rational sense out of it, you will, I mean, have some troubles. This is why I really want you guys to follow the damn rules, because the rules will put you into the right spot, knowing which pattern you need to use. If there is a trend, search for the third range boundary. If it's already happened, well, just note the level and move on to another range. If the range is so complex that it doesn't look like anything you know, well, don't try to overthink things. Put some fibs and rest. Okay? It's really that easy. If your range is preceded by a trend and is not inside a higher time frame range, trade the damn third range boundary. If you want to trade anything else into this range, if it's going from context to context, of course, then, boy, trade the fibs and rest. All right? Dumb range mode, you don't give a fuck. You can trade this range as long as it exists. As long as you don't take a stop loss, trade it. Remember what we've stated. When you trade a range, there's only one thing you need to account as a potential misleading indication is the chaos option. This is your only failure. If you are in a range, if the market oscillates from support to resistance contexts, put the fibs, shut the hell out. Don't listen to anyone else. Wait for Fibonacci's, get in, put your stop loss, wait, and don't listen to anyone else. Just do it, and you'll see that it works. Just play that, okay? We got 15 minutes now, so we're going to move up and do the thing over and over again. But I like this because this is definitely one of the markets that you're going to be there like, well, where's the third range boundary? Well, there's no third range boundary. Not preceded by a trend, so don't overthink things, be dumb, put the range boundaries, and shut up. Okay? Let the dumbs talk. Don't be the dumb. Okay? The only tradable context in here was this one and this one. Period. You would have bought this signal and this signal. End of the story. Terminated structure. This one had no triangles. You wouldn't even have bought this one unless you were really aggressive. But this one was COVID, so of course you know that it has fucked some timings. But despite that, sell, buy, and let the dumbs talk. Okay? Minimum Fibonacci 76%, trade above the context, and that's it. Okay, now 2 random letters. Let's go for TH. Stocks, and that would be Tonghua Holding. Tonghua. Oh, great! A big range. That's gonna be nice. Okay, so... well, no way. No, that's not gonna be good for us. No, not for a perspective. Okay, anything else? We're gonna go TH. Target Hospitality. Oh, no, trend. Okay, so trend means look for third range boundaries. Remember, guys? Okay, so do the job. Oh boy, in here, oh, massive range. Oh, great. Oh, so nice. I mean, this is crazy bullshit. Don't ever apply my strategy into this. Okay, look at the volumes, look at the liquidity. This is just, oh boy, don't trade ever on these things. Okay, not enough liquidity. Don't apply my rules in here. Anyway, trend, volume, liquidity, sounds good enough for you. Where's the third range boundary? This is really what I want you guys to do. Do this for 1 hour long exercise and don't spend more than 10 minutes on a single chart. 15 minutes at best. Which means I would like you guys to cover 4 charts per hour at least. And if you spend more than 15 minutes on a single chart, move on to another. Okay? So, where's the third range boundary, please? I'll put the numbers out there as usual. So that would be 1, 2, 3. I don't know. Yeah, 1, 2, 3. 1 for everyone. One for everyone. Who's not one? There's none yet. No, there's one. There's always one. If there is a reversal on the context, means there's the third range boundary. So in here, it's 1. Okay, no problem. That's another delayed third range boundary. Okay, we've got everything. We break the trend. Jesus, sorry about that. So we break the trend line. Okay, we've gone from context to context and we reverse without making new lows. And in a second stage, we break both the context and the previous low point, high point. So delayed third range boundary in here. Okay, remember that if you have troubles figuring third range boundaries on bearish trend, reverse the contexts, reverse the trade, okay? And here is something you must be able to figure out. Context to context, rebounds after breaking the trend line, not making new highs, and then breaking the previous low point as you reverse the context. So when you break the previous low point is where you figure out that the third range boundary already occurred. Okay? On a delayed third range boundary, there's no Fibonacci requirements. I would say retrace at least to some significant levels. I mean, if we were just rebouncing in here before breaking, that's still the same pattern, okay? Let's consider a minimum 50% retracement. If you absolutely want a black to a 0 to 1 answer, yeah, consider 50% is a requirement, okay? So we've got it. In here, third range boundary is in there. That's all I want. Okay. And you've done the job. Okay. Terminated. Take a screenshot. Share it into the Discord for someone to correct. And move on to the next chart. So, RD. Oh, on the above spot. Yes. Let's go. Oh, not enough. Okay, too bad. That was a good idea. RVDA Incorporated. No boy, not enough. No worries, you'll find some. Royal Dutch. Yeah, that is something we can analyze. All right. So do it in real time. What do we have? I can see a trend. So there is a third range boundary. Where is it? Where is it over there? Is it over there? Is it over there? Is it going to happen next? Uh-huh. I don't know. Normally, you guys should have an answer. Give it to me. If that's the right one, I'm okay. If that's the wrong one, we'll figure out why. But there is no maybe, okay? If there's doubt, means you don't know the rules far enough. You need to practice more. There should be no doubts. FE, what is that? Okay, 1 second. I need to drink a bit of water. First. What the hell is my bottle? Where is it? Okay. So 1, 2, 3, 4. Oh, final excess. No, it's not. Final excess has to go higher. Yeah, that's a weird one, but still. There's no trend. I mean, if that is not a trend, then I don't know what this is. But this is a trend. I mean, we're not putting our yellow level glosses. Remember that. We simply make sure of a single answer. Is it trending like or ranging like? In here, moving average is set at far below the rising context, so trending context points. We don't look at the market with the yellow level glosses. We look at the market with green to yellow to white glasses level. So it's a simple yes or no answer. Does that look like a trend? If that's a no, then that looks like a range and we're going to trade it. Either with the third range boundary stuff or with the DOM area stuff, okay? To trade the third range boundary, we need a trend. And we need to make sure we're not on the higher time frame. So in here, the higher time frame, damn it. I need to be better at switching. The higher time frame is still rising context, and we have a moving average that has been set at below the context, so we have a third range boundary. The question is not if, it's where. Do we have it or not? I would say 2 and 3 makes absolutely no sense, so the question is it there or there? Find an answer to that question. I'll put it to a vote as well. Okay, so 1 or 4. Try it out. No one pays attention to your answers, okay? I'll just like to see the statistics out of this. No, vote on the thing. Okay. So 1 or 4, which one? I'd like everyone to vote. Okay, everyone stands for the 4. Why? No, it's not a new high. In order to set a new high point, you have to set the value. I mean, you have to make multiple candle closes above these levels. This just looks like a goddamn double top. Remember that double top structures are things that you will never trade. But that doesn't mean they don't happen. So whatever this is not conventional. It's not part of the strategy. So yeah, I will put it out there personally. But I wouldn't disagree with those of you who are putting the 4th one. What I would like you guys to see, anyhow and anyway, if you go for the 4th options, okay? Here's what I want you guys to figure out. That this is blurry and it looks like a damn double top. So if you hesitate between 1 and 4, by definition, what's the only acceptable answer? No. In a range, you always lessen the risk as much as possible. So if there is a risk that you would trade this one, and the third range boundary could eventually be there because it meets most of the criteria, but not necessarily all of them. So there is a little bit of doubt, and I also agree with that. But what's the safest place to choose? 1. So it's 1, okay? You're not going to trade this one because there is a chance it's not going to be a third range boundary, but a 5th one. And there has been a preceding fucking trend. So don't go for the riskiest option. Always go for the safest. You probably already missed the third range boundary. Put it there and move on. What is your range maturity? 1, 2, 3, 4, and pending. Terminated. Okay? Don't make it any more complicated than that. All right? Another example. Random letters. Are you? Okay, not enough history. Not enough. So the other thing that you can do if you want to look out for interesting shares that you don't know anything about, actually we're going to do it. Okay, well, we're going to terminate with this one anyway. But if you want to have lists and stuff like that, you know that TradingView has been putting some shareable lists. So you can pick some random traders list of assets and analyze their list. Okay? That's one way to put it. Or you go for random 2 letters and you search for assets until you find something you know. So range trend, what is it? Okay, that would be trend anyway. We're making new lows, so until we reverse this context, there's not going to be a third range boundary. Okay, so we at least need to retrace to this context to have something interesting. As of right now, it looks like a market that's going down, period. Okay, so let's scroll back in time and make historical analysis. So the market in here was going down. It reversed the context. Is this a third range boundary? Why not? Yes, it's one. Don't be biased by what happened afterwards. Is the pattern rules met? Are the pattern rules met in here? Yes or no? Yes, they are. This has been a bear trend. We've made new lows, we've reversed, and we've pulled back to the context period. There is a third range boundary in here. There is no glimpse of hesitation. But this market is a bitch. Because look at this big, beautiful range. This is an expanding wedge. But still, there is definitely, and there has been a trend in here, no other options, which means anytime we've reversed the context, there was a third range boundary. There was another one in here. Bearish, retraced the context, rebounds, but failed to make new highs. So there is no delay in here. So the third range boundary might be there and cannot be anywhere else. Okay, so in this chart, I can see a trend, and I can see that there has been multiple third range boundaries afterwards being there as a normal one, not delayed, and this one as well as a normal one. Both ended up broken, but still. Oh, this one works pretty damn fine. This one has made its job. This one did not. Okay, has everybody seen these two? I assume no one, but this is what I'd like you guys to do. Following the rules, you can only come up with these two. Even though this market has nothing to do compared to the first one. And the first ones we've done before. They are all different markets, but if you follow the same goddamn set of rules, you'll always find the relevant information in this mess. Anything else in here is bullshit. We can see that there has been a trend. So anytime we have made new lows and reversed the context, we have a third range boundary. Okay? And there will be another one coming. Yes. But there has been a trend in here, and I can see that I'm not into a higher time frame range because I can see that we're going down on the high time frame. So yes, I'm sorry, I've gone a little bit too fast. I should have removed my expert glasses. You're right. Before putting this one, I should have zoomed out. You're right. I should have zoomed out. But I can see that we're not in a higher time frame range. Okay, so I just showed it to you, but I should have verified that information. I agree. Okay. Yeah, I'm sorry. This is a habit for me. I do it naturally, but I know you don't, so this is my mistake, okay? So very good question and very good remark. I should have zoomed out to the high time frame. Yes. Good. Okay. Want to do one last one before we terminate the session? All right. Give me a random set of letters. DK. Dilek. Okay, go for Dilek. Oh, that's going to be a big range. Nice one. Okay, so bear trend, bull trend. Great. Great. Okay, so if you ever consider this being a bear trend and forget about high time frame range, third range boundary would be there. Third range boundary will be there. Okay? For these trends, of course, they are not existing because higher time frame range is clearly visible in here. Okay, so we'll go weekly chart. Oh, man. What do we do here? No, no, no. Monthly eventually, but as you can see, monthly is not going to have sufficient history. So what do we do here? Fibs. Yes. Dumb trading behavior. Don't try to be smarter than that. Go for the dumbest option, but by far the safest. Okay? So where do you buy? Where do you sell? Easy task. Short selling in here if there's such a thing as a signal. There would be a short in here, and there would be a buy in here. And in here, but you would have taken a stop loss. This one would definitely have been a stop loss. But anyway, I mean, you would have made 1 gain, 2 gains, 1 loss, 2 gains. No, not yet for this one. Oh yeah, you would have been taking profit number 1 on this one in here. Remember that the DOM zone is first taking profit on the 61 fib, second taking profit on the opposite direction. Okay, so we'd have been taking profit number 1, taking profit number 2 for this one, taking profit number 1 and number 2 for this one. Yeah, hell of a chaos. Yeah, you can skip this one, but like I said, if you want to trade this the only possible way it can be traded. Dumb behavior, period. Move on. Okay? Really, don't make it overcomplicated. This is dumb. Play it the dumb way. Let the dumb trade. You are smarter than them, so you're going to make money. This is still a profitable strategy to do this. It really is, but right now, well, let the dumb trade. You know that you're going to buy here. We are in a reverse chart, by the way, so we should have reversed first. Okay, so you want to buy this thing? Well, this is where you bought it last time. And now you're waiting for your first taking profit at $40, second taking profit 48, and let the dumbs buy the shit in here. You sell them. Okay, this is dumb trading. Be dumb. Okay, next. No, you don't buy here. The pattern is in here, which means the risk limitation always comes with these contexts, which means the stop loss has to be large. Okay? So the stop loss must be there. It means below 0, which means you buy and hold this thing. There is no margin trading possible. Okay? It's easy. And it's 2% capital. So you're certainly not going to make a lot of money with this. Okay, anyway, last example eventually, and then we move. AL. Air Lease Corporation. Good, great. Whoa, nice, another range. Okay, it never trends. The higher time frame doesn't have enough history to be considered a range. So what do we do here? Exactly the same structure. Go dumb. Okay, you go here, you want to buy here. When you were there, okay, buy, you want to buy here. Okay, make it dumb. And now we've made new lows. So where do we buy? Where do we sell? We buy here, we sell there. Period. Okay? And you always trade above and below the context, unless you have a trending signal inside. But that's a topic for another day, okay? Normally you don't do this. In a range mode, in a dumb mode, well, you trade into the goddamn fibs. You stop thinking about anything. You dumb trade. Dumb means really take your brain, turn it off, buy the shit, sell the rib, and let the dumb stock. Okay, when you see a trend, find the damn third range boundary. When you see a stupid range, put your fibs and put it at rest. Okay? And just do it, and I can assure you, you will be trading much better than 85% traders out there. That doesn't mean you will turn into a billionaire. That just means you will stop making mistakes and stop trying to make sense of things that don't need any more attention than this. Putting some fibs and let it rest. Okay? I think that's going to be more than enough for today. But if you guys have any questions, I'll take them. But in order to think of the market as a range trader, which is what I want you guys to do first, apply some patterns, stop overthinking things, being patient and contextualizing your market correctly. Well, if you can do that on your own multiple times in a row on different assets without making too many mistakes, means congratulations, ask for your green level and start trading these things in real money when you see one. And then in the meantime, start learning trending contexts. Okay? And then you progress. Same thing is at play for the yellow guys. They learn the patterns, they practice. They ask for the yellow color, so that means they can start trading these contexts while they learn to get better at other advanced stuff. They start learning reverse patterns and so on. Okay? That's what this is. When you master the technicals, you practice them with real money. Of course, you certainly don't use 2% capital at risk on your first trades. You always go easy. And that's pretty much it. When you see something that you have seen multiple times on your replays and exercises, well, trade it with a limited amount, of course, and see for yourself if it works. Work your psychology out of the usual stuff, okay? So in ranges, you know that your worst enemy is fear of uncertainty and impatience biases, so try not to fail for them. Try to rationalize your decisions before pressing any button in a range. Make sure you don't fall for one of these two. What is your strategy? And most of the time, it's either going to be a third range boundary, so the rules are clear. If you trade the third range boundary, the validation is the opposite context. It is the opposite trend channel. The target is the opposite context or 76% fib. If this is a trending range, then you know that the target is breaking the previous low point or high point, and you have a slightly different risk management, okay? If this is a DOM zone, put the DOM fibs and trade only when the context is broken around these levels. Buy the fib, wait for a signal. I mean, the signal is not necessarily required, but it's better. So wait for the market to go into DOM areas, let the DOM stock. Of course, when you're going to buy and sell into these areas, the market sentiment will be at the extreme opposite. Everyone will be scared the shit out of them. Don't listen to this. Fear of uncertainty. Don't listen, okay? Don't listen to other traders. Don't listen to commentators, analysts, whatever. Just trust your fibs and just trade it, okay? And you'll see, do it multiple times and you figure out by yourself that this works much better than what you did before. And this is just the first step. Putting your feet into the right direction, start moving, and of course, I'll teach you how to run afterwards, which is far more interesting than just putting one foot in front of the other. In Forex market, that means most of the time, daily and weekly chart time frames are going to be massive, stupid ranges. Though, put the fibs and let it ride. It's really going to be that way and that dumb. There are some other specific cases which we've seen last week. So you can watch last week's replay. But basically, on weekly charts for Forex means I'll allow you a lot of once in a while to trade third range boundary like patterns without being preceded by a trend. Which means the only difference between this and the DOM application is that you will be able to trade bullish and bearish third range boundary patterns inside the Forex without having a trend, okay? But only on weekly chart time frames. Okay? But that's a topic for another day. I just don't want you guys to mix things up today. So if you want a safe entry into Forex, use the fib zone. Use the DOM zone, okay? It's always better to go for the safest option. Trading trending ranges inside Forex, I told you, can be done, but I would likely say you'd rather like to save that for later. If you want to have some safe first trades with Forex, go for the easiest option. Fibs. Anything on daily and weekly has to be fibs and period. Yep, on major Forex, okay? Of course, minor Forex will go trending, but major Forex, like we explained last time, it's a battle for currency. So anytime there's one too devalued, central bank will print some and buy some other currencies. Sorry, the opposite. When the money is too devalued, they're tightening the monetary policy and selling the coins, selling the other currencies. So this is really what this is all about, okay? It's not a normal market. It's a manipulated market. The Forex is all about manipulation because we're playing with currencies. And therefore central banks have always had their control over their monetary policies, and they've always manipulated the Forex market. So that's why we have ranges. There are some exceptions, of course, because there's no such a thing as a simple rule for anything in trading. So the schematic of ranging Forex markets might not necessarily last forever. This is the current stance. From my entire experience in the market, I've never seen major market in the Forex trending, but potentially this will change. I don't know. Nothing is ever for granted in the market. But as of right now, trade the dumb fibs, and if you take a stop loss, well, you take a stop loss. That's it. And remember that weekly chart trading, oh boy, you have to be real patient. It takes years to complete. Take the AUD and ZD as an example, okay? AUD and ZD, the craziest motherfucker I've ever seen. Craziest range I've ever seen. And once again, look at where we are, guys. I never thought we would be there once again, and yet we do. Yet another load up into the dumb zone area. Incredible. Absolutely incredible. I never thought we would do this. I really thought this time we would be good enough to go, and we did not. Yet another fucking boundary. Incredible. Despite all of the bull signals we had on the trend channel and so on, the market didn't found the strength, so what did we do? Yet another dumb trade. It's incredible. It's been lasting for a decade almost. And, well, I don't know, but it's going to terminate sooner or later, and when it will, I'll get my trend trade. But until then, it's a dumb mode. Really dumbest mode ever. What? I found an out FX pair. Oh, Euro SGD. Oh, well, yes, but that would be a trending context. So in here, we range first. We do easy stuff. So accumulation, I'm not going to talk about it here. Okay, I'll stop it for the replay. And then I think that's going to be it for today. Bye, guys.